Okay, guys. So I'm making a quick video, and I think I'm going to make a property looking at just discussing the elements that we've learned on the live scenario by making small videos on a daily basis where you can just follow and see. So you guys have seen and watched the videos on the stochastic indicator. You've watched the videos on the Bollinger Band. We've talked about the divergence, and we've talked about what these things mean, that there are indicators that a certain instrument has been oversold, and or that the speed and the momentum of that instrument is reducing, and if we can measure that speed and momentum is reducing before the price movement echoes it, it means that there's anticipated behavior. So I've got Ethereum here. So Ethereum had a beautiful uptrend from here at the bottom. It went up, pulled back, made a newer high, pulled back, and made a new high again. Okay, and if we look at our stochastic indicator, nicely follows it up, 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 up. There was the first little swing, went up. Next little swing, made another little swing. That was actually a divergence. But as we can see on the Bollinger, both of them were outside of the Bollinger Band. Over here, both of them were outside of the Bollinger Band, so indication of still an increase in momentum, not a decrease in momentum. It did do a little pullback, but true as Bob, it ran up to here. And then suddenly when we hit this top level, which also was, by the way, a level that was tested quite significantly. So if we draw all our support resistance level, this was tested there. It was retested there, retested there, retested. So a very strong support level. So we had a bull trend going up. It hit a support level, and on the nose of that support level, we suddenly see also what's happening in our Bollinger Band. Bollinger Band is indicating to us that, listen, it's outside of the band, now it's piercing. It's literally just cutting, slicing through with its high of the day, which is what indication? It's an indication that there's a slowdown of momentum, okay? Oversold, or actually overbought, sorry. That's then echo. Now we're looking for, we cannot make a trade decision just based on that. If you were in this long position, that will now be a red flag for you for this long position, in the sense that, all right, is this long position open over? Is the market in a position where it might slow down, retrace, or turn its direction? So we look at another indicator, that's the stochastic. And if we look at the stochastic here on that peak and that one, there's a clear divergence. Okay, so now we've got a line like that from peak to peak, and a line like this from peak to peak. And we see there's a divergence between the stochastic and the price movement of the chart, which is now our second indication that echoing that the market is slowing down, momentum and potential reversal is in play. So we've actually got three. We've got a very strong resistance level. We've got Bollinger Bands. We've got stochastic that's, yes, oversold as well, but most important thing about stochastic is divergence. And we've got divergence here. So we've got three red flags saying to us, this bull trend is in trouble. So what will I have done if I was a trader and I was in this trend? Well, first of all, I would have closed my position then on this candle, all right? I would have closed my position on this candle with the anticipation, okay, it's going to retrace, which it now is doing. Now, can we now just go and trade when we were over here? In other words, if the chart was over there and you haven't seen those candles to the right, do you just short the market at this stage? Absolutely not. You need to have a confirmation that the trend is going in the opposite direction. All of these things are telling us is that this bull trend is in trouble. But remember, it can have two effects. Either one, it means that all of these bulls are now resting and getting ready for their next run, or the bears are going to overtake the bulls and the market is going to reverse in the opposite direction. So you have to wait for a setup, an indication that gives you a green light to enter. So that's not a setup. That is just a warning. That's just a picture that tells us about the emotions that's happening in the market at the moment, right up till that. The divergence, the stochastic, the Bollinger, the support line, all of those things are saying to us, okay, there's a picture, there's emotion we can extract. And that emotion is definitely not a bullish emotion. That is a neutral bearish emotion, which means, okay, if you were into this trade at this moment, you've made your money from there to there, then it's probably time to either halve your position or close your position because you've made the easy. Then you wait for a reconfirmation of the bull trend. So in other words, this might pull back and then rerun, very possible. Or you're waiting for a confirmation for an entry for a bear trade. So let's see what happens. So the market moved on. And so it tested this little support level that was tested here before. Testing it here, testing it. And formed a triangle. So let's have a look at what that triangle looked like in a 4-hour chart. So we're zooming in a little bit. So on the 4-hour, we see, wow, it's created a beautiful, beautiful formation. Tested it, and then hammered out of this formation right there. Okay? This will then be your signal to enter into a bearish direction. Up to this point, I would have just exited my bull trend. Now I'm waiting for a signal or a formation or a strategy to tell me which direction should I re-enter. So I'm waiting for whatever is happening here to tell me it's good to re-enter in this bull trend because it's going to continue. The bulls have rested and they're going to run. Or is this a reversal of this bull trend? Now, we had a trend which was higher. It was high. It pulled back, it attempted, it failed to run up, pulled back again, took out this low, pulled back, and then made a new low. So this, in essence, is also now described doom for this bull trend because it wasn't able to make a new high. Then formed the formation. This formation was then the first time that gave us the opportunity to say, all right, where can I enter into this new move, this reversal move, which was at the breakout of this candle there. Okay? If it broke up to the upside, that means that would have given us an opportunity to re-enter potentially, depending on what all the other signals were in, to the upside. In other words, a continuation of the bull. Let me just switch that alert off. See what's happening here. Just close that. Right. So recap on yesterday's videos. We've got Bollinger Bands. We've got stochastic. We've got support lines and resistance lines. How could we implement them in trading? This is a beautiful example where the market was moving up, making new highs, got to a strong resistance level. So that's warning flag number one. Then Bollinger Bands was indicating a loss of momentum and speed because it was closing outside and then pierced the Bollinger Band. Stochastic was an oversold position as well, but the most important thing about the stochastic, it was in divergence, which says it's a slowdown of speed before the price movement indicates it, which is right up there. So the price movement was still high, but it indicated the slowdown of speed, momentum. True as Bob, it pulled back. Couldn't make a new high, pulled back again, formed a triangle, which was beautifully trackable in a lower time frame with more candles. It broke that triangle, which was then the signal for entry. We would have entered here, and if we would ask, what's the target? Obviously, let's have a look at our triangle. Our entry of our triangle here was 114 points, 15%. So that would have been our target here. which is exactly to the nose 15%. So that length of that triangle there and the distance this ran was on. So this is a 100% technically perfect triangle break formation and setup on the markets. Good. Chat to you guys later.